YouTube. Hello, everyone. Welcome back to the RationalInvestor.com's Weekend Frivolity. This is our broiler chicken show that we broadcast on YouTube and to the public. Hey, there it is. And as I sort of said last week, what I think I really would like to see happen with this broiler chicken show is two things. Number one, we just had a whole new swath of level oneers to our education program. And thank you very much, Da Vinci and his whole crew, and welcome aboard and make yourself comfortable. And, all the other people, we had tons of referrals from different sources all over the place. So thank you, everybody. And I think, that's good because it just goes to show I think we're giving good value for your hard-earned money spent. And I think they're in good hands, but also, too, we're going through some really heady concepts right off the bat here. We dive right into eating our vegetables. And so I think it's not a bad idea that we actually give the level oneers the ability that if they just didn't have a concept that was totally, a question or something that wasn't totally addressed, that I could verbally help walk through some of the concepts that were reviewed. So if you're watching on YouTube and you're wondering what this reference is that I sort of say, okay, and this person asked this, and so I thought I'd take a moment and talk about that. That's what that's about. And I see one person in particular that I kind of picking on in the daily brief, but only because she has such a nice picture. But Colleen here is in our level one program, and it's great to see that you're right here. And, you've got my ear, all of you level oneers. I mean, she's got her picture there so I can see. And I'm sure there's a few of you else that are in here in the Hangout Lounge that are in that level one program. If you have questions, feel free to ask. That's what we're here. We're here to help, So I do understand these are some very thick concepts to wrap your head around here to begin with. So if I can, I definitely don't want to step on Grimm's toes. He's doing an absolutely bang up job as our level one instructor past term. And I can see he's off and running this term. I think you're in great hands. Perfect guy to learn from. Absolutely perfect. The OCD works well in her favor. See, now there's the smile I was talking about. See how his whole face lit up there? That's what I was looking for earlier. So anyway, he's in the hangout in the lounge. And by all means, if you are a site member and you want to be able to participate in this broiler chicken show, we do post the hangout link, so you can always pop in and just interact with us as we're sort of going through this weekend show. In fact, hello, there's somebody who just joined us. Robert, if you could throw yourself on mute, I would kindly appreciate it, or if somebody could help him, I would appreciate that. And then the second sort of key objective of this weekend show, I actually like the idea, and I've gotten into the habit of it recently, and I think it works well, is that I just sort of walk through the tweets that I've been putting out through the week since the last show. And just sort of give you some context, because I post a lot of charts and a lot of crazy rants, and sometimes I need a little bit of explaining. So by all means, I like the idea of this weekend show being a way for me to sort of tell you, the public, what it is you're seeing on the feed and what was sort of going through my head when I was going on. So without further ado, I think, like I said, the level oneers are going through their strategic planning part of their course. This is a really hard concept to wrap your head around. So I thought I'd just take a couple minutes and just sort of dovetail this idea that markets move in cycles. And if you can just think of your generation, I happen to be a Gen Xer, so I was right in between two major generational pockets. So in a weird way, maybe that helps me, because I sort of am outside the system, and I've lived my You're a candy grabber. That was one of the, I do quizzes for the level 1 course, and I try to think of funny sort of odd answers for, because there are multiple guests, right? So what was the name of the predominant demographic that just cite, actually, and really you could argue that's these guys right here. And one of the multiple choice questions was candy grabber, which of course is, in a weird sort of way, maybe they are the candy grabbers, right? Because they're totally grabbing all the millennials' candy. So maybe they are. But anyway, we were talking about the baby boomers. And really, that's the predominant demographic that has just gone through its life cycle. And interestingly enough, like, you guys gotta, I don't know whether you guys believe me or not. A lot of people look at me and go, "There's no way you're old enough." But I was a full service broker through the .com boom, and ran a book of business. I was a young guy at that point, but I mean, I watched the whole thing, and I watched everything play out exactly the way that we had anticipated, but I didn't really believe it at that point. This idea of the US dollar bull market, US dollar bear market, the effects of demographics on economies, asset preferences, given what age group those demographics happen to be in, and what is going to happen in our society as demographics sort of go through their life cycle. And on the site, in fact, I think I was even posting this in the level 1 room. I think I have it over here. Cycles. Really, you could argue that there's actually a whole bunch of cycles that are all sort of going on simultaneously. Then there's sort of like the value of money, the interest rate cycle, that sort of overrides the whole thing. But within the interest rate cycle, there's usually 2 demographic cycles. And then within the demographic cycles, you have the economic cycles. Think of, recession, boom, bust, once every 10 years or so. Then even within those economic cycles, you have business cycles. I often make reference to the business cycle moving average. And I think actually Bitcoin's right up against the business cycle moving average. And then you have like seasonal cycles, buy when it snows, sell when it goes, that kind of talk. So what we're, primarily talking about is actually this cycle, the demographic cycle. When we look at these kind of images. And it's just simply, what is the preference given where you are in your life for what kind of assets you might be interested in. And, the interesting thing about this is that, this is measuring a hard asset versus a soft asset. Hard asset being gold, it sits on the ground. I'm a lump of gold. Here I am. I don't change. And, and theoretically, you can eat it and it makes you live longer. I don't know about that, but there's a lot of people that actually believe in gold as, and, like Anunnaki and all that kind of crazy talk. There's talk that gold has special properties that only the ancients know about, but that's here nor there. The point of the matter is, for some reason, we've decided it's a store of it's a store of value. And it's a classic hard asset. It ain't going anywhere. Versus something like the Dow Jones Industrial Average, which is a paper asset. I mean, technically, stocks are worthless. And you have to understand this. I hear a lot of people in crypto saying, well, is crypto a commodity or is it an equity? It can't be an equity because equity simply means earnings engine. It's just equity is another way of saying earnings engine. And if your company has no earnings, then your equity could be worthless. That's a brutal reality of investing in stocks. There's no guarantee. There's no intrinsic value. There's no principal. They are earnings engines. And if there ain't no earnings, trouble. And usually what ends up happening is companies that maybe did earn money and then stopped earning money, they end up going into debt to stay alive, and their debt ratios get absolutely out of control. Then they can't even service the debt with whatever earnings they have left. And if they don't turn around those earnings engines, ultimately the equity ends up in bankruptcy. And in that case, basically equity owners get zero, nothing, zilch. So Dow, paper asset, ethereal, right? It's only based on the perception that the company will earn money down the road. Gold, hard asset, physical asset. Now, something happened here over the latter part of the 20th century and the beginning of the 21st century, and that was this idea that we could actually technically create like a digital hard asset that theoretically has a fixed supply and has a track record of ownership. And you know, the one thing that I absolutely love about crypto, and I'm surprised more people haven't gotten into this, but you know, like artwork and famous sculptures and stuff like that, it's only worth the provenance. If you can't prove the actual track record of ownership going back to the guy who actually, you know, did the sculpture or painted the artwork or whatever, then, you know, like there's a lot of people running around going, I got a Jackson Pollock, I got a Jackson Pollock. And there's like this documentary on YouTube about a lady who's trying to desperately prove that she has a Jackson Pollock, and nobody will believe her because she can't connect the dots to back when he did it. It seems to me like crypto would be absolutely perfect for that, the entire antiques industry and everything about artwork, you know, and that kind of stuff. So sorry, funny tangent there. But anyway, the point of the matter here is at the beginning of the 21st century, we've developed maybe this sort of an alternative hard asset to gold. So, you know, this is a very interesting image. In essence, it basically is 3 generations going through that generational cycle that I talked about here. This is like 3 full demographic cycles here expressed in just simply they go through their life cycle, and during different parts of their life cycle, they have different preferences for different types of assets. It's just brutal reality. And think about it. I mean, when you're young, right? You're going out and you're spending money on sports cars and, you know, maybe buying stocks, right? You want it to grow, and then you're pitched, right? In your 30s and 40s, got to save for retirement. Well, the best way to get yield is buying, you know, equities that have an annual return of 11%, 7% capital gains, 3% dividend yield, versus fixed income has average a yield of 5% minus inflation means only about 2 or 3%. So you can't make your money grow in fixed income. Blah 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 blah. Right. So the point of the matter here is that if you actually think about demographics going through their life cycle, it actually makes perfect sense. And then, of course, once you get into retirement, you're like, okay, these stocks are risky, and man, some years we're up and some years are down. Just get me the hell out, right? And put it into something safe and guaranteed, and so I can go on the golf course and I can go play canasta, and I don't have to think about this crap. I know my money's sitting there. Sometimes people will prefer to put that money into fixed income assets like bonds and government securities, and I think that was the predominant trend for the baby boomers. And, you know, sometimes like in the 1970s, you know, with the rise of socialism and all that, you know, hard assets come up, bonds, because of the interest rate cycle, were a terrible place to be investing. And so people didn't want to buy bonds because they were falling. So they parked their money into things like gold. I think to a certain degree that's exactly, you know, the same cycle the baby boomers just went through has happened. It's not really anything new. The difference here, though, and this is what I was trying to tell the class this morning, is that something came along and ate gold's lunch through this cycle. And it's quite remarkable when you actually look at the charts. I think I have them up here. I spent like 5-10 minutes trying to get ready for this video, and I still don't have my head on straight. Where the hell did I put those damn charts? Anyway, I was sharing them with the class. We'll just go through them. I don't think they're over here. Well, I mean, to a certain degree, I wouldn't mind talking to you guys about this, but there was one chart in particular that I had up here that I wanted to show you guys. See if I have it here. You know what? Actually, you know what I'm going to do is I'm going to pull up the level 1 classroom because I posted it in there. Yeah, it's probably faster to do it this way. All right. So this is when I need like background music. Anybody can do elevator music? All right. We'll pull up the classroom. There it is. Awesome. All right. And so this particular cycle, and what's really interesting is it almost happened almost exactly on cue. What the heck's all this? Oh, why am I over here? That was weird. Let's try that again. Are you going to go in there? Hey, there we go. All right. Where is it? Just give me a second. I'll be there. So, we're talking about this. I posted in the class the current cycle. And let's see where we are here. Okay, it's staying longer than I thought. I apologize, guys. It's in here somewhere. And I guess we typed a lot of stuff. Scrolling. Maybe somebody else can find it. Here we go. There it is. I had this chart up here. I'm not quite sure why I don't have it now, but anyway. So this, now somebody's PMing me. Brian, you're wasting all our time. Would you get on with it? Jesus Christ. All right, so this cycle. So, in normal markets, if you will, and this is basically the advent of Bitcoin coming onto the scene. But you can see in classic markets, you'll have a weak U.S. dollar and a strong gold market. And then gold tops out and the U.S. dollar bottoms and U.S. dollar rallies. U.S. dollar tops out and gold usually bottoms. And you can see the bottom trying to come in here on gold. And then all of a sudden, really where gold should have shone like it did up here, notice this crazy digital asset thing came along and just ate everybody's lunch. So to a certain degree, the question for this kind of chart right now is, how much did Bitcoin eat the classic gold market's lunch? And the sad part about it for the gold bugs, okay, is they were pretty darn bitter through all this. The gold bugs all have been waiting for this market forever. And, basically calling, the end of the US dollar and all that kind of talk, right? It was like the perfect scenario for gold. And then this crazy thing called Bitcoin came along and just gobbled up all the purchasing power. So what ends up happening, this is this image, right? You can see that this image ends, 2009, 2012. So this is basically the continuation of that. So what did happen after that 2012 sort of pivot? The Dow gold ratio actually started moving up. But then, this is the $64,000 question out of all of this is, did this ratio get skewed because of Bitcoin? And I don't know. That's going to be a question for the ages. And, maybe we have to ask ourselves, will there be some sort of like hybrid proxy? Because gold is sort of very much a 20th century story. And here we are living in the 21st century. And I think a really good way to look at this is this is a story about the baby boomers. Right? That's what this image is. It's around here somewhere. There it is. This was their generation, but they're now gone. The cycle's over. This is going to be the really, really hard thing for you guys. I hope you all notice that you're all, interestingly enough, very much. Well, Colleen, you and I, we're old timers around the site here. I don't know whether you notice, but a lot of these guys are pretty young. And Zach, you're younger than I am. Oh, your daughter's Gen X. Okay, so you're even maybe in my parents' age bracket. So anyway, the point of the matter here is that the millennials, this is actually now your market. Now, the sad part about it is Big Brother's going to really try and fuck with you to start your cycle. It happens every cycle. The baby boomers, they had to start their cycle on their knees. And it was really sad through this period because, I remember I think I tell a lot of the site members that I distinctly remember my mother sitting at the dining room table through here, couldn't figure out how she's going to pay the bills, make all the money ends meet, because the Toronto Transit Commission, the TTC, raised bus tickets from 25 cents to 35 cents. And I literally watched her in tears at the dining room table. She couldn't figure out how she was going to make ends meet. So, that was sort of the start of the baby boomers generation. And sadly, guys, I hate to say it, but we actually have to go there, I think, before this cycle actually officially shifts to the millennials generation. But we are in that sort of shifting point right now. I don't know what this is going to look like. And frankly speaking, if we actually include in some sort of future index, where the hell did it go? I thought I had it on here. Hold on. Trying to find the image again. If we try and, oh, wait a minute. Do I have the chat room open here? Yeah, this one here. If we try and, maybe create like a hybrid index or something of the gold and Bitcoin, or maybe this is sort of the official starting point of actually now we will use Bitcoin as our ultimate fear proxy going through the 21st century, right? This is a very 20th century proxy. Maybe this was the official pivot that now Bitcoin is that official fear proxy. But I really do believe that, and the sad part about it is that everything about Bitcoin actually, to me, is exactly what was supposed to happen here. Does it make sense that if you invest in Bitcoin and you believe in Bitcoin, that means you are explicitly saying, I do not believe in the US dollar and the fiat currency system? Like, that's really what this is all about. In 1980, really, you could argue, here was the 1980, same sort of thing, is that at this point you had, double-digit inflation, so it was perceived that the market had lost control of inflation. You also had Americans being paraded around downtown Tehran with hoods on their heads, really, really nasty, day after day after day. Remember, wasn't there like the Delta Force or whatever Jimmy Carter sent in to try and rescue them, and it turned into a total disaster? You had the 1980 Moscow Olympics. Communism and international socialism was at its peak. And literally, this is nothing more than just a complete loss of confidence in the system and in the US dollar as sort of the ultimate proxy for the system. And I might argue, like the talk, of course, of late is that, QE, helicopter money itself is worthless, complete lack of confidence in government. I mean, we see what the current government is in the United States of America, and that is a government of non-confidence, not a government of confidence. Fear, uncertainty seems to be at its zenith, and how, I find it incredibly coincidental that, in essence, Bitcoin acted the way that it did. Going forward, and this is a really tough pill for crypto kids to swallow, and I know it's not a very popular thought, but I actually like to compare what crypto has done here and the insane highs that they took Bitcoin to, and the US dollar bull market in 1980. And it's quite remarkable, looking in hindsight, how similar these assets have acted. In fact, actually, I had a really cool conversation with somebody on the site, and not only, this was the 1980 peak, but we can actually draw a lot of parallels with the way that silver prices acted and the way that Bitcoin looks right now. If we actually, I think this is from a few years ago, is Kevin Stafford. Kevin, you're here, aren't you? Usually he's here. But anyway, I think he PM'd me, and let's see if I can just show you the chart. But we're seeing a lot of similarities between the way Bitcoin's bull has ended here and other bull markets that have come to an end. Where's that chart? So yeah, here it is. I'll just quickly show it to you. I don't think it's really proprietary. This was the chart that he sent me on. There's silver, the 2011 bull, and this is Bitcoin 2017-18 bull, and how that silver market had to unwind and how Bitcoin is unwinding. And here's the kick in the pants, guys, and this is what sucks about all this, especially if you're relatively new to this game, is what I actually see happening here is actually very normal. You don't like it. It's not fun. It's almost cliche how nasty this stuff gets. But I don't really see anything that's actually shockingly out of the ordinary. And I've always made this argument, and especially for the YouTube audience that will watch this later on, I honestly believe that as long as Bitcoin price stays above the cost for sort of the big, oligopoly miner players in Bitcoin to stay afloat, then Bitcoin just doesn't give a rat's ass what price it is. It just doesn't care. It is, and for the record, right, I think it's really important that we understand that there's actually two different stories going on here simultaneously. Do you believe in the technology and what Bitcoin actually represents? The evolution of the internet, just yet another phase. Probably now, I guess we're in probably the third or fourth, inning of this internet build-out story, and how cryptocurrencies are just yet another chapter in that story of the evolution of the internet and sort of the world coming online. Do you understand the efficiencies that blockchain can bring to the system? The irony of it all is that the millennial generation is coming online. The millennial generation, of course, believes in Bitcoin wholeheartedly. And we have to ask ourselves, if I can get the damn chart. Hey, what I do? Maybe I have it over here. We have to ask ourselves, what is going to fuel the growth for this millennial generation? It's coming. Don't fight this, and if you don't believe Brian, my suggestion is go look up what's the guy's name? He was on CNBC, Chinese guy, Chinese Oriental. Tom, I want to say Tom Lee, Fun Strat or something like that. And he goes into, did I get it right? Tom Lee? Oh, good. He goes into great detail in his, very corporate presentation, very, MIT, Harvard, all that kind of stuff. So if you don't want to believe Brian in this, go listen to him. And I did see there were some other people in the level 1 today that were kind of like, well, is there any way we can find some like third-party outsource to validate some of these concepts that Brian's trying to impart? And Tom Lee did a very corporate presentation of the baby boomers generation and their spending habits and the way that they move capital based on their demographic, and the upcoming millennial generation, and this is the point that I was trying to make, Colleen, earlier, is that you and I are kind of like, we're the oddballs here. Most of these guys are pretty young, and girls for that matter, on the site, but most of the people here are millennials. I like Jacques and his 13 friends over there in Berlin, right? I mean, you guys are that millennial generation. It almost makes me sick to my stomach. I went out on Friday for drinks with a couple guys that are, site members, and they're planning on doing some course content. And I made reference to, oh yeah, I remember back in 94 when this happened. And the guy said, oh yeah, I was born in 94. It's like, what? Oh, it drives you crazy when you hear that. So the point here is that the millennials are coming. You guys are here. I can see it. This is happening right in front of my face. And what's really interesting about this, and I saw a guy on Twitter recently was making reference to the fact that you can actually see the millennials coming online. How? We had, while the baby boomers were leaving the workforce was shrinking. And Bureau of Labor Statistics came out with data saying that we needed 89,000 new jobs a month in the monthly employment reports to just maintain, just to keep the unemployment rate stable. That was all through this, baby boomers are retiring, they're leaving the workforce is shrinking. This explains a lot of quantitative easing, explains a lot about government policy in level 1 class today. One of the questions was, what is the sort of impetus of social spending through this? Well, if government budgets are being contracted because the workforce is shrinking, so tax revenues are shrinking, well, things like welfare, things like food stamps, things like infrastructure spending all gets put on hold, right? Those are those social programs. And interestingly enough, through this cycle, what was the only thing that the politicians could not touch? And the answer is Medicare and Medicaid, and they actually went up. Why? Because the baby boomers were all in retirement, and they're the ones voting. They vote for the politicians. They say, you touch my Medicaid, you touch my Medicare, you're not going to get revoted. It's simple as that. So, try and play connect the dots, level 1ers, with this, shrinking workforce. So, and shrinking government budgets, and where are their priorities when they're spending money? And it ain't on welfare. I can absolutely guarantee you that. Okay, so the point of the matter here is, labor statistics said we need 89,000 new jobs just to maintain status quo. The last employment report came out, 315,000 new jobs created. So you would think that if everything was staying stable, the unemployment rate would go down with all those new jobs created. But the unemployment rate actually went up. Why? Because a whole massive new swath of workers just came into the workforce. So I'll talk more about this as we go forward when I piece together all the pieces of information, but we're actually already starting to see the millennials coming online. And through this period here, we actually saw a massive amount of baby boomers all come online in the workforce, which sort of created that go-go 80s kind of market. And it's very difficult to see that right now. But my hunch is now, and this is another thing that we have to understand about the Dow, is that, when you see the prices quoted, and somebody can just grab me that long-term Dow chart, or I'll spend 10 minutes scrolling through the chat room again to try and find it. But I think, Grim, you posted it on here. When you see this Dow Jones Industrial Average over, mind you, maybe you didn't post the link in here. That's too bad. I thought I had it handy. Anyway, the long-term chart of the Dow, you have to understand that the Dow is actually priced in US dollars. So if they go and dilute the crap out of the US dollar, then what ends up happening is the Dow itself gets highly manipulated. And it gets bid up. And the irony of it all is that what you hear is the helicopter bags of money. Oh, thank you, Christopher. If you did this, I could kiss you. Let's see what we got here. The survey says, oh, you got it. Perfect. So what you have to understand here is that $1 back here is not the same as $1 here. Now, through the video lectures, I talked a little bit about the different political situations and why this market didn't do what it was supposed to do through its correction period. And now we live in a world where this thing actually must go up. We have no choice. So go back and watch that lecture again. Super, super important concept. But you have to understand that when you look at stock prices on face value, what you're really doing is you're looking at them denominated in US dollar. Is the stock actually more valuable Or is this thing less valuable? But nobody ever talks about this thing over here and the purchasing power of it. Now, I do know that there's a lot of people that are like, oh, yeah, I expect gold to go to new highs, blah, 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 blah. But I got to say, again, I really do think that, where did I put it? Yeah, here. I really do think that the cycle similarities between what happened through that last fear cycle and what we just saw with crypto leads me to believe that this pivot happened exactly the way it was supposed to happen. Only this time, a lot of the purchasing power went into this thing called Bitcoin rather than into gold itself. I also want to, sort of reiterate too that, what does the next 20 years look like? Well, the irony of it all from a cost of production perspective, and keep in mind, this time 2 years ago, Bitcoin was $1,000, $1,500. The SEC originally rejected Bitcoin, and Bitcoin was sitting at like $1,500, and that was in March of 2 years ago. So, could this be this kind of scenario? Remember, what does Bitcoin need to stay alive? Cost of production. Did the cost of production go crazy up like that? Well, that was that whole difficulty function. And frankly speaking, I don't know whether I really buy into that difficulty function, because what I'm noticing over time is that difficulty is falling. So I don't know how that really works. And I've heard lots of people talk about difficulty when it comes to Bitcoin, and that could justify the higher price. But I just don't know about it. I don't know whether it's solid. But the point that I'm trying to make is that this is like a 20-year period for the price of gold. 20 years, right? And you notice that a good portion of it sort of spent sort of bobbing and weaving between the sort of, lower part of this trading range, not really trading up in this upper part. I could very easily see Bitcoin, if you did like let's say the cost of, let's be generous. Remember Mr. Penis Eater, that now actually I suppose we have to call him El Penis Eater now, right? Because he lives in Venezuela, right? Anyway, you'd have to be a crypto enthusiast to understand that joke. Yeah, maybe he's going to run for president of Venezuela. Oh, goodness. Anyway, a couple of years ago, he publicly came out and said that my cost to produce one Bitcoin is $1,000. So let's use that as sort of the mark from a couple of years ago. And we know that Bitcoin halves every, 24 months, is it? Is it 2 years or 3 years? I can't remember just off the top of my head. So you just do the math, like what price, if we go 1,000, 2 years, okay, so now the cost of production is about 2,000. Then another couple of years, cost of production is 4,000. Then another couple of years, cost of production is 8,000. How many of those halvings do we have to get for that geometric progression to get back up to 20,000? Ironically enough, it's probably a good 10, 15 years. It wouldn't surprise me. So, like I said, I think there's a lot of similarities between that last fear cycle apex and what we're going through in Bitcoin right now. Find it really interesting, the similarities between silver and Ethereum. And even in class today, Grim was talking about silver, and the market's sort of considered like gold's like sort of a little cousin. And you could argue Ethereum, same sort of thing. The good part about it for anybody who's coming new to crypto right now is that we're at the bottom end of these trading ranges now. We're no longer up top here. Are you going to see 20,000 Bitcoin over the next little while? I doubt it. But could you make money? Could you double your money in this kind of trading range over the next 3 to 5 years? Easily. And now, ironically enough, when the Bitcoin futures first came to CME, there was lots of talk that the traders were like, oh my God, 10, 20% volatility in a day. This is heaven, right? And so a lot of that sort of gravy has been taken out of the market because all the pros are coming in. Right? And now Bitcoin's going to turn into a very classic asset that probably moves in the same sort of statistical fashion that even the gold, for that matter. I mean, you can see into the end of that particular greed cycle, the volatility really came out of this market. So we'll see how it goes. But my hunch is there is money to be made. I think just like Bitcoin, you can actually go through a lot of different altcoins and look for this pattern. And we all know the secret to buying half decent risk in the market is that good old W concept, right? Here was that last cycle. This is on Phoenix. If we start seeing down, up, down, breakout, and in this particular case, I remember Phoenix, they really messed with those lows just briefly there. If you look on things like Stamp, you see it. But the bottom line here is hopefully everybody can see that horizontal support and resistance levels taken out here. And then we start making higher highs and higher lows. Well, you got yourself a bull market. So really my advice to everybody is just wait. Just be patient. There's no hurry here whatsoever, especially when we look at price right now. What I'm a little worried about, and it bothers me a little bit, is we might actually see a W painted here. They might rally the market up here a bit, and everybody's going to be like, okay, this is man. And then we get into these resistance levels, all these previous lows, and that funny wicks and tails like to be eaten. And if we do things like reload zones off of ranges here, you can see that that would take us up into a reload zone, right up into this area up here. Everybody and their brother is going to turn bull on crypto, and then she's going to roll over again. So this is going to take a long time to clean up. There's no doubt about that. What I've been suggesting on the site a lot recently is if you are interested in crypto, that create just simply where the hell is it? Geez, I'm totally disorganized today. I'm sorry, everyone. I thought it was this chart. It doesn't look like it. Just create, actually, I guess it's here. Just create a crypto versus USD denominated list and get in there and hunt for those W's. A lot of these names, I mean, it's quite shocking, right? If we, I happen to have on this GNL, I mean, it just happens to be one that was on my screen. But if you look at some of these charts, from a venture capital perspective, any venture capitalist should look at that chart and go, holy fuck, I got to take that trade every day of the week. Let's say you threw $1 at 17.5. What is it going to actually take for you to double your money, sell half, get your original money back in your hands, and be sitting on a free position? Well, that's only a rally to there. So from a venture capital perspective, this is heaven. But of course, the public is gone. They all got wiped out chasing the Lambo stories up here. And only the people that are really interested in this space are the ones that are really left. So hats off to all of you for just sticking through all this shit and not blowing yourself up. And now I would argue that really this is a buyer's paradise. You just got to be patient, wait for the setups. You want more confidence that the idea is going to work? Well, just include more reasons in your setup. I want to see W's. I want to see W's in the indicators. I want to see W's in volume indicators. I want to see, moving average crosses. I want to see GAN levels. Ooh, that gets really crazy. Right? 8-to-1. There you go. Jonah's RLZ between 0 and 88.6. Could be. Okay, so that's an interesting comment, right? You would have said, but Brian, wasn't this a reload zone right in here? Why didn't the market turn? Well, you got to understand, there's nothing guaranteed in this business whatsoever. If you had nanny nibbled on, this just happens to be one name, on the 78.6, and you just, that's buying it at $140. Obviously, nanny ain't doing any selling right now. That's for sure. You might have, and the interesting thing with this, of course, and it kind of sucks, but if she had been going through the cycle, maybe she had a bunch of capital gains, and here, maybe she booked the capital loss and said, just blow it out because I need to offset gains elsewhere. That is one thing, but that's small consolation. This might also be a really good tell for, 3 reasons for a trade. Okay, well, I've got location. Do I have any signs from my indicators that we have a bottom? There's nothing there. All right. Well, do I have signs in price, W's, that there's a bottom? We can even change this to a line chart. And there's a new M. There was a potential W that came in there, but it just never came in. So if you're going to be doing the nanny nibbles strategy, this is why it's absolutely critical that they're nibbles. You certainly don't give and bet the farm. That's for absolute certain. I have two simple rules of investing. Number one, try to work with a model that produces desirable results a good 60-70% of the time. And then number two, don't ever break 5% of your portfolio in any one single idea. Here's a really good example that if you threw 50% of your money into this idea, you'd be very, very upset. You throw, let's say you have a portfolio of $100. You throw $5 into it as a nanny nibble. Yeah, well, that $5 is gone. That's manageable in this world of risk. I would even suggest that that's like an absolute ridiculous, well, ridiculous, not the right word, absolute firm ceiling. You're just never allowed to break that number. And to make sure that you never break that number, probably not a bad idea to risk like 2.5%, half of that number. And then that way you could always add to the position if something like this falls down. Just 5% is you're never, ever, 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 ever allowed to break that number, ever. Okay, so the point that I just make is, old money, yeah, you're sitting underwater if you bought against these lows. If it's a setup, then you better gotten the hell out of there. If it was a nanny nibble, you're just sitting there not doing anything. Maybe book the capital loss if you had gains elsewhere. But other than that, you're just sitting there doing absolutely nothing. The irony of it all is if this thing does bottom here, and I just totally randomly picked this asset, it's not like I chose this. I would actually expect at some point down the road for this thing to do a 50% retracement. So ironically enough, even nanny nibbles there at 134, actually, yeah, that'd be very close to a double for them. How ironic. But at this, as it stands right now, if I did nanny nibble on this, well, then I don't really have any more reason to be a buyer. If it was a very small, like 1% nanny nibble, I could always add to the position as it's sort of working its way lower, just as long as you don't break that 5% rule, ifs, ands, or buts. And if you're new money to this space, wow. I mean, really, the irony of it all is, maybe it takes 6 months, maybe it takes a year, but this is ridiculous. There's so much money to be made here. It's not even funny. It's remarkable because this is actually the exact opposite of where we were 1 year ago. It's like literally diametrically opposite pole in just 1 year. I can't believe how incredible this has shifted. So, a big function of this, and if anything, it's not a bad idea to sort of create a list of survivors. They just spent the past year washing out a lot of these names, especially the names like, if you see guys like Vitalik actually giving projects money to keep them afloat, those are names you should really keep a close eye on because obviously he really likes the idea. And a lot of the time what we really want to do is we just want to ride on the coattails of the smart money. So, I mean, I don't know about this name. I don't know whether that's the case or not. And interesting, Zach's even saying here there are some that still haven't even made new lows. Like this just happens to be a piece of crap. I don't know whether it's going to survive. One that I was talking to with Dav on his little video that I did there a month or so ago. I love the look of this little one. I mean, I think there's a ton of money to be made on this friggin' thing. And the interesting thing is it's actually trying to confirm a weekly W as we speak here, which is incredible. Wait a minute. I thought crypto was a bear. I mean, there's a lot of money to be made on a name like this, right? And you zoom in. And you go, oh, gee whiz, there's one of Brian's crazy-ass little W's trying to come in here. And also, too, we might even get like Davo signals. I don't know whether we'd have like a weekly Davo screen. I bet you that would be a really powerful model. So Davo, if you're out there, consider, and we got a whole bunch of your army here on the site. Maybe we could consider building Sen, you're here too. Maybe we should think about building like a weekly screener for the Davos. That would probably be really powerful. I don't know whether Sen's here or not, but I see his pretty picture. I've already searched for weekly Davos. Oh, okay, cool. Oh, right on. Excellent. Okay, so the point of the matter here is I think this is a shopper's paradise. I really do. Level oneers just sort of went through this. What is rational analysis? Ideally, what you would like to do is go and build a, a, a universe of ideas that you like. Dav himself has fundamental screens that he likes to use to filter names. So by all means, you can use that route. I personally would prefer, to be honest with you, if you're a level oneer or anybody's on the site, I'd actually prefer that you actually learn what is good fundamentals on your own rather than just, well, this guy says do this, so that's what I want to look for, right? Take the time. You're in the education program. We're going to spend a whole module on fundamental analysis here. So take the time and really get to know what is fundamental value in cryptocurrencies, if that's your bent. We'll introduce you to stock fundamental screeners. We introduce you to some metrics of how we figure out cost of production for the commodity sector. Don't really get into too much fundamentals about fixed income. That gets pretty complicated, so probably a little bit beyond our scope here. But especially with regard to crypto, I mean, get to know what does a heavy coin look like? What does a light coin look like? Looks like Charlie. What is this idea of cost of production? How do miners maintain the value of a network? How does that work? Right? That's all about sort of fundamentals. What does it mean by like a developer's reputation? Find an example of a developer who has a really bad reputation. Cabbage coin, cabbage. So once you sort of have that screened list of, whether it be stocks, like one of the models I like to follow has me really active in the stock market at the end of the year. So I bought thousands of dollars worth of stock heading into the end of the year using this one very specific fundamental screening model. On cryptocurrencies, maybe it just might be, oh, you agreed with my idea? Thank you, Jacques. I just got the notice that you agreed. It might be something like the amount of coins outstanding. And I always think lower amount of coins outstanding means that the individual value of each coin is more valuable. Get to know the difference between POS and POW. And that idea of cost of production. What does it take to actually validate the network, right? All that kind of stuff. Once you've got your screened list, okay, these are the 50 different names that meet my screen. Then when we're in the candy store, you can start applying your technical setups to the ideas to time your purchases a little bit better. Davos, right? Tangodators, all that kind of stuff. Okay, so wow, that sure was a mouthful, but I really wanted to talk to the community. It's also a good idea just to sort of refresh with the community where we are on this cycle and what's sort of the big picture with regard to cycles and, where are the baby boomers? Officially, they have now left the economy. Who's taking over the millennials? Are we starting to see anecdotal evidence of them coming online? Yes, we're seeing it, employment data. And then, the last sort of piece to that is that usually the cycle reset button is hit through a recession. So remember I showed you earlier about that sort of 1980 market. Well, so, these are the past two recessions. That was Junior Bush and the dot-com boom, the unwinding of that. And then this was the end of Junior Bush's tenure, ironically enough. and Mr. Obama inherited the housing crisis disaster. Usually, stock markets get knocked down by about 50% in recessions. So I was joking, or not joking, but I do believe that they're going to take this stock market to new highs. The yield curve is not inverted yet. When the yield curve inverts, then we'll know that the party's over. So the question ultimately here is, do we see new highs? I wouldn't be surprised if we actually do see. Maybe we just kiss new highs, something like that. And what would 50% correction? Gee whiz, what a coincidence. It would do nothing more than just take us back against these previous highs. And, as technically speaking, there should be a lot of pent-up demand to buy this asset off of these old highs. Guys who see this big, wide base and say, okay, well, if it ever comes down here, I totally want to buy that. So if you actually did like a 50% correction off of that and use that as the base of those highs, that would actually probably give you a pretty good idea of where the stock market wants to top out. So we'll see how that plays out. So I do expect that a recession needs to happen here. Recessions usually happen in years that end in 8s, 9s, 0s, 1s, and 2s. Here we are in year 9, and it's either going to happen this year, next year, or the year after that, or the year after that. And as we talked about just a few minutes ago, the whole world moves in these cycles. You really don't have any choice. We will at some point have to go into recession. It's just the natural economic cycle. It has to happen. So with that said, ironically enough, I've been touting on the site. And actually, you know what? I'm going to leave that commentary for that. We should pop on over to the Twitter and just sort of update what I was thinking about here through the week. So this is an interesting conversation in that, here was the last video. So I really like this because this is potentially how crypto could maybe break that gold scenario that we saw in the 1980 fear cycle peak. And that is, can crypto transition from this store of value story to a growth story? And can we move from, well, I'm just going to buy my Bitcoins because I know that the payout to miners is X dollars. So, they want to validate the network. They're going to keep the price above that, and it's going to rise over time, which, if I'm lucky, just meets the rate of inflation. And Moore's law and computing power doesn't offset it, blah, 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 blah. And basically my money is safe, right? Yes, the price of Bitcoin will go up, but the purchasing power of the currency goes down, so it offsets. But maybe if we're really lucky, crypto can actually transition into a growth story, right? And more users, and it becomes a way of transacting efficiently in our system. But I do really believe that this is entirely predicated on actually the volatility coming out of the Bitcoin price. So ironically enough, as this story builds, I think that you're actually going to have the volatility as Bitcoin is used less as a speculative investment and a store of value in sort of a perceived, US dollar chaos, and more of actually, I don't even know what the price of Bitcoin is. I just use it to do my transactions. And I've said repeatedly, we started this company in 2014, and we tried to use Bitcoin as sort of our payment method. And we said, okay, well, site services will be like 0.25 BTC, buy the course for 1 Bitcoin or whatever. And it just was chaotic with the amount of volatility in the Bitcoin price. And I think to a certain degree, which is sort of sad, but I really do think to a certain degree that one of the reasons why this thing went as violently as it did was because the higher ups didn't want Bitcoin to be adopted as a means of payment. What's the one way you can absolutely ensure that companies can't use Bitcoin as a means of payment is inject some serious ass volatility. And that's the irony of it all. I was sort of alluding to it earlier. Do you actually believe in crypto as a efficiency engine, which will drive corporate profits, which I believe, which will fuel that next millennial generation's greed cycle? Or are you buying Bitcoin because you're gonna get rich and you're gonna buy your Lambo next week? And I would prefer that we move towards that sort of blockchain as a way to increase efficiencies in our system, and through the adoption and use of the cryptocurrencies, there's natural demand for them, which makes the networks more valuable over time as they get used more and more and more, versus, oh, well, I'm just going to buy this cryptocurrency, hold on to it for a week because I know the price is going to be higher next week and I can go buy my Lambo. Right. And I think, unfortunately, we're actually going through that transition now. All the Lambo people, BitConnect, all that kind of stuff, they're gone. And hopefully we're transitioning into this, how does crypto actually change our world? The sad part about it, of course, is most of you are like, I don't give a shit about that, Brian. When's Bitcoin going to double? When's it going to triple, right? When should I buy? So there's still a lot of that sort of just speculative fervor in this space. And unfortunately, as long as that exists, it's tough for me to make the bullish case at the moment. And, price will ultimately dictate if we do start seeing W's come in here, like I showed you off that RLC. I don't know what the story is here, but I can definitely tell something's going on internally, and this is the kind of shit that I want to see out of Bitcoin, right? Show me W's. Awfully tough to see this guy. And that's predicated on this thing finishing here today. I mean, I've seen lots of times I do these shows early Sunday morning, and by the time I come back from Liam in the afternoon, a lot of these names have just given up the ghost. So, for heaven's sakes, don't chase this thing in here. We go down to a daily, probably if you did want to pick some of this up, I would probably just be working bids and reload zones. This is a great thing when we got people like Sen on the site. He builds scripts that help us see these price gaps. So you can see there's a little price gap right in there. There's also a juicy one right there. So, maybe what is that? It's like 17 cents or whatever, 19 cents. I might even be interested in throwing some bids against these lows if you wanted to participate. But I'm not pounding the table by any means. Okay, so this is a really interesting evolution in the crypto space. I love this. This is awesome. This is going to lead to us moving away from store of value to mass adoption, which lets crypto and Bitcoin become a growth story again, which is what I really want to see, is that natural growth rate. Martin Luther King holiday. Markets were closed on Monday in the States. I thought this was a really interesting commentary. Almost everybody, and when this guy spoke at Davos, concentrated on, oh yeah, Bitcoin's a failed story. Well, it isn't, as long as the price of Bitcoin stays above the cost of production. And I think even now, we could probably, you guys aren't going to like to hear this, but if we use Mr. Penis Eater's levels, and we'll even say that maybe there's like a 50% premium over what he said, that's still like, let's see if I can find a chart that I can use here. If we do stamp, that's still down in this area here. Even with, there's $2,500. So we'll give a 50% premium to Mr. Penis Eater's price, whatever. Could this be sort of the ultimate floor for Bitcoin? It wouldn't shock me if that was the case. I still think there needs to be some sort of capitulation event here. I'm a little surprised that there hasn't been a capitulation, but we'll see how it goes. We don't have the weekly W's in yet, and it's still looking soft. So, really, the higher time investors, there's just nothing really to do just yet. All right, let's, I lost my train of thought there. All right, so halfway through the week, and this is what was really worrying me, is you remember I posted out this little sort of inside bar fail here, and that looked really bothersome to me because it actually confirmed this double top. And like I said, we never did get that capitulation event. And then right here, they did that exact same candle pattern again. Now, I get the impression it's not called a gravestone doji. I don't know why I did think that, but nonetheless, inside bar looking very weak, and we actually did lose these lows. But another thing that I think is important to note here, and one of our longtime site members, he hosts the show with me that we do sort of Monday through Friday. He's on 3 days a week. He likes to call this market state right now the washing machine. So you've heard Brian talk lots about higher time frame. Green boxes are supposed to be buying windows. So this really is a really, really terrible place to be a seller of Bitcoins. So as a result, I can understand why the bear is going very slowly here, because I'm sure there's a lot of people that are like professional traders that would go, I totally want to short this thing, but this is a horrible trade location. I mean, if you just think about it in simplest terms, what's the statistical odds? Remember, there was a CME trader dude that actually shorted Bitcoin up here, and he said he took profits on his shorts down here. Because think about it, this is trying to like squeeze the last sort of like nickels and dimes out of a trade, maybe here down to here. But, you hear Brian talk about 50% rules, maybe there'll be some crazy ass shock to the system. And just like we did on those other ideas, where is the 50% rule? It's sitting up here at 11,000. Maybe there's some crazy ass shock to the system. And so, a guy who's thinking about shorting here, I'm not quite sure how I did that. Anyway, in essence, there's your risk reward window. It's the exact opposite to what you really want to see. So I can understand that a lot of professionals look at this and go, okay, that's my potential reward, and that's my risk just on a 50% retrace, right? And, we look at the gold and silver from the last cycle, and I think I showed you that. You can see right here, here's the gold. So it did dump, right, against these lows. And then you have this violent counter trend rally that's contained within a broader bear. And you can see how close it came to its 50% rule of just this range. I think silver did somewhat the same thing too. Right here, off of this range, almost exact 50% retracement. So we're sitting sort of down here, and I can understand the professionals are like, okay, so this might be my potential profit, but I've got to look at this as my potential risk to take that short. Oh boy, I don't know whether I'm really interested in that trade. So, how does the end of this move look like? I mean, like I said, I've said a couple times now, I would have liked to have seen, and in the 2014-2015 run, that was a big rage quit. And actually, we had a rage quit story in an altcoin. What was that altcoin, that rage quit story? And it actually doubled. I think it was one of the Z coins just shortly right after the rage quit. So, I mean, go figure. Anyway, this was the Mike Hearn rage quit, and in essence, that did mark the bottom. I really would like if we could get some sort of rage quit. For the short term on the site, I've been just posting this chart where I think we're sort of in this channel, and we're just sort of bobbing and weaving as we work down this channel, making lower highs and lower lows. You can see there was that, oh my God, does Bitcoin jump off a cliff here? Because it looked pretty precarious, I'll tell you. When I put that tweet out, we were sort of right in here. We just broke the inside bars low. We were like, actually, no, it was this one here. So it was even worse, right? So we actually opened up. We tanked down through there, and then they just ratcheted the market back up. So, phew, I thought we were going to tip over there. You can see the AB equals CD. If we go AB, CD, you can see that's going to take us right down against these original lows here. So, the problem here is I can't unthink this kind of thinking until we start seeing some W's, please. Maybe we have the makings of something here, but you change this into a line chart and that just sort of disappears. Nothing really to get excited about there. So on that tweet, I was just sort of like, holy crap, are they going to pull the plug on this thing? And it just feels like the market's ready to go. Where the hell's that damn tweet? That's weird. Well, maybe this is it. We were just sitting there, and it just looked to me like that she was ready to dump, but thank heaven she didn't. Phew. And I think I even said, hope I'm wrong, eh? Yeah, hope I'm wrong. So it was. Phew. Sort of a dovetail to that thinking, because I thought it was kind of unfair just to leave the sort of the public hanging. I tweeted out that this was sort of what my expectations were going forward. We'd either AB equals CD, take us down into these areas, or the bullish scenario was just simply nothing more than just a retest of the reload zone against those highs. Let's see if we can show you what happened. I think it's this one. There we are. So I had put out, through the week, repeated comments about how the market seemed to have been trying to set up. Now I've lost it again. Yeah. These either a break to the downside or a break back to the upside. I put out a few of these through the week. Here's a further update, basically that same chart. Bearish, AB equals CD, or bullish up top. And then when you zoomed in, you could really see how they were setting up these levels. But the problem here, and actually one of our longtime not long time, well, he's been around a while, but anyway, one of our site members, he's a TA in the lounge, was kind of like, well, Brian, you're getting a bit sloppy with your bots. So bots recently, I've been sort of buckling down and getting back to the rules, if you will. So I really want to see like 3 higher lows if I want to take this short, or 3 higher highs if I want to take the long. And if you get these kind of tails like this, then it completely resets the count. So as a result, what we actually been talking about on this site recently is this is just like a total washing machine. Right. And we've been putting out these kind of tweets, and messages, the washing machine in full effect, where, if I was thinking bullish AB equals CD, then I want to see like 1 low, then another higher low, then another higher low to set up the trade. And you can see they came down, made 1 low, 2 lows, brought it up, and then bam, new low. So as a result, we had to reset the whole thing again. And this is now our new bot entry level. And then conversely, on the bear side, same sort of logic. These are our bearish bot levels, the high there. We started off the study with the high there, went to new high, so I had to do a reset the count. Now we've got 1 high, 2 highs, maybe this is a 3rd high. There is the bearish bots levels. And also too, what I noticed as I'm looking at this is we could probably actually draw a trend line. Boobity boom. So now you can start to see that if we start getting structure through here and a failure, then actually the bearish bot comes alive. But what I noticed over the past week or two is just lots and lots of wash. And that's what we've been talking about on the site. In the daily briefs and stuff, is how this market is just a washing machine right now. They're just washing the market back and forth, back and forth. And I even saw it first thing this morning. We have sort of 3 different liquidity windows that we should be cognizant of. And this is one of the liquidity windows. This is sort of when North America wakes up. And my time, of course, I'm on the west coast of North America, so everything is 3 hours ahead. But anyway, 5 o'clock to about, and the rule for me was never trust the first hour of trading. That's 6:30 Pacific time to 7:30 Pacific time. But the long and short of it here is this is exactly that rule. Don't trust that first hour. Right. On the site, we call these, and I think there was a guy on internet a while ago who, when I was back at my old prop firm, everybody used to like to follow him. He coined the term kill zones. through these windows. And really what they are is the beginning of sort of the New York session, the first couple hours, hour before, hour after. Remember Brian's rule, don't trust the first hour of trading. That was a cardinal rule in my broker days. We also have the New York kill zones, which basically are right around, did I say New York? Sorry, I meant London. We also have the London kill zone, which is around the London open. And then we also have the Tokyo kill zone. But it's a bit bigger because Asia opening range is spread over a very wide distance. But anyway, the point of the matter here is this was the New York kill zone. And I even woke up this morning and saw that Bitcoin price was falling out of bed. And I was like, ooh, don't get trapped in that suckers move, Brian. And sure enough, within an hour, they brought it right back to basically. This is interesting. This is what we call horizontal support and resistance. And we often find that the market likes to sort of settle in around clusters. These horizontal support and resistance lines, especially like the larger ones, are drawn off a higher time frame. So you can see all these key high and lows over time. What ends up happening is on your horizontal support and resistance study is you get these clusters where price is sort of naturally attracted to. And what a surprise, you can see how the market is just completely pivoted right off of this cluster level. So, for OKCoin forwards, I've been saying on the site that 3480 area seems to be a really, really important level for this market right now. And I suppose we could actually adjust that now from there to there. You can go up there, and if this thing does resolve bullishly, then we go there, all the way up there. So, New York kill zone trap. Hiya! Gotcha! Again, more sort of washing machine talk. And that's been the theme on the site for a while. And I think, just simply put, this is a horrible place to put on new shorts. So I think a lot of the professionals, and we even heard that CME guy saying, I'm not short, I took profits, man. I'm going and buying drinks. And I think it's a little too early for new longs to come in. There isn't just not enough anecdotal evidence of the bottom is in. Show me W's, right? That kind of stuff. And so as a result, we're getting this very wishy-washy trade. And unfortunately, within the wishy-washy, the trend is still pointing down. Very difficult market here. Very, very difficult. Not going to sugarcoat it. This is not easy at all. And you can see all these wicks and tails. They're just breaking people's hearts right, left, and center. And I thought it was really interesting. Our pro commentator that does the shows with me, he's like, I'm not getting involved in this chop. I'll just simply wait for the market to calm down a little bit. And frankly speaking, I think that's not a bad idea whatsoever. And if anything, it just shows how professional he is. So, Chop Vegas is what we've been sort of talking about on the site. I really love this kind of conversation because this is sort of the application of crypto and the efficiencies of crypto outside of crypto. I thought that was a great story. A guy set up a, you can feed my chickens if you donate 50 cents worth of Bitcoin. And he set up the whole system. I thought it was so cool. And more talk about Mr. Trump. Thought it was interesting. I like to follow this gentleman. I've told you in the past, I really like that Not So Fast This guy, DJ Thistle, very, very smart individual. I would recommend that you follow him. He's pretty, got a pretty good head on his shoulders. And he's been talking a little bit about Mt. Gox information coming out. So, if you are still part of the Mt. Gox story, probably a good idea that you stay abreast of what's going on. One of our OGs from basically, I think one of the first terms of the school, we've been following this relationship of OKCoin forwards to spot price, and how can we use that information to as a sentiment guide. So it was really cool. JC tweeted this out, and I sort of retweeted it. And actually for fun, because we didn't have it before, is we can actually do all of we can do Bitcoin, Litecoin, Ethereum here, for example. I'm supposed we probably could do a whole bunch of them on MEX, but just a really, really good example of this idea of using forwards contracts and the relationship to spot price to give us an idea of what sort of the sentiment within the miners is, and the space in general. So I sort of retweeted out, and it's ironic that JC tweeted that out because this was the subject of this past weekend's level 2 class. So you probably saw that I published these charts on TradingView, and you're kind of like, why the hell is he doing that? And the answer was because this was the topic of class, and I wanted to make sure all the students had this matrix. So this is in essence how you set up, and I published it. So if anybody wants it, just go grab it. But this is how I would measure sort of, the 1 week, 2 weeks, 3 months, then the cash market, then overlay all of them together to give you sort of the short-term push, sort of, if forwards prices are higher than cash prices, that implies a bullish tone. If forward prices are lower than cash prices, that implies a bearish tone. And you can actually see it sort of work its way, these relationships shift back and forth off a short term to give you sort of an idea, just a validation of what you're seeing in price action. And then also, too, if you look at a little bit longer term, this is a 6-hour chart, you can get a pretty good idea of sort of what the tone of trade is. And it was interesting because, when my show co-host looked at this, he was like, wow, that's cool. And it should be like, everybody should look at this and go, damn, this is actually really powerful information. Because what does it imply? It implies that, gee whiz, there was a pretty negative push here. And of course, we all remember, when Bitcoin broke through that 6,000 floor, all hell broke loose. Then we had a counter trend rally, try and take that back. You can see Bitcoin actually emmed out right on the 0 line. Then we sort of headed back down, but notice we have not broken new lows. The only one that did break to new lows was Litecoin here, but it's interesting to see. Look at the incredible structure that's coming in on this spread relationship here. But you can see the Ethereum, it's trying to W out, and you can see Bitcoin, it's trying to put in a bottom here, and it's trying to recapture. Excuse me. It's trying to recapture the 0 line. So in essence, the fact that everything is negative here validates that, well, sure looks to me like the trend is still down. Sentiment is still down. But you can see the base is trying to come in here. Not so much on Ethereum, but definitely on Bitcoin and Litecoin. The bull is trying to set some sort of base. And very simply put, if these spreads all ratchet up and we start Wing out here, then we know that the bull's back in town. And what's so cool is back in 2016, 2017. Thank you, Kevin. Kevin said, bless you on YouTube. It's delayed. That's adorable. And, just have some fun with this information, but it's incredibly valuable, this idea of contango versus backwardization. So that's what that tweet was all about. And somebody asked me in the tweet, can you explain what the heck it is you're trying to show us? So hopefully that helps you understand. And I even did a follow-up on the gold market, for classic commodities. Okay, so that basically brings us up to date on the Twitter. As I had said, unfortunately, the trend is still down. And, looking at that spreads information, that's sort of further sort of validation. I was a little disappointed, so there are all those spreads that I watch. A little disappointed to see that our altcoins that had actually put in this double bottom ratcheting higher. And I even put a tweet out saying, holy crap, the altcoins are actually, I think the Twitter, crypto Twitter has another name for minor altcoins. But it was interesting to see that they were actually double bottoming and breaking out here. Bitcoin itself, at best, we can call that flat. And then the altcoin indexes with the major names in them on Trex and on Binance, you can see that they actually enjoyed a nice little counter trend rally, and they're actually calming down now. So the bigger altcoin names are coming down. I thought it was really interesting over the past week or so. We really did see quite a bit of outperformance from the littler, sort of mid to bottom tier altcoin names. So, but as you can see, a little bit of a tops coming in here. So, and I sort of, I watch a whole bunch of them just to sort of see what's going on. And I see a lot of sort of the recent euphoria is coming out of the market. So I've got a bunch of stink bids working. I might actually be doing some buying. You can see on Tokes, I might actually get a fill here soon. So I have actually been pretty active, nibbling away, very nanny nibble trades, incredibly small. I think, and I think actually you can see them on the trades here. Just really, really small nibbles, like 0.25 BTCs. Just in there nibbling away, nibble, 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 nibble. Nothing really dramatic. I will say that just a FYI to everybody, this crypto portfolio page is broken. It's not actually reporting correct data. I showed in one of our recent daily brief videos, the Trex account alone has, I don't know, 150,000 or something in it. And I'm not going to show that on the YouTube page. We've got accounts all over the place, Binance, Polo, Cryptopia. Let's see what happens with that mess. In fact, actually, in our lounge, we had somebody post a funny little phishing message. It really looks like a phishing message email from some sort of crypto person they got in their email or maybe on their phone or something. Be very, very careful if you are on Cryptopia giving that kind of information out to anybody. Go slowly, please. Don't just be giving your information out to anybody. As well on Volt, we got a whole bunch of the gold on the books. So long and short of it here is I just want everybody to understand this page is not correct. It's broken. It's not actually reporting correct amounts. So just, be aware of that. All right, I think that's about it for site-wise that I want to report. If you just want to see what the nibbles that I am buying into here recently, feel free to check that out. And of course, you can always PM me. All right. I suppose the last thing that we should do is maybe just check for the requests. See if anybody actually asked me to look at anything in particular. I've been going on for about an hour and a half here. I have to wait till end of month, but technically we ought to look for something along these lines for the coming year. Yeah, okay. So we're watching the January barometer. Grim, you got a hop? Oh, Grim, you have to practice your buy for now. Is that what that's about? All right. So somebody, and actually, guys, especially you level oneers coming right out of level 1 class, if you have a question about the current week's topic that maybe you just, you didn't quite feel like it was fully asked or answered, please, post it in here. But one of the things that I follow as a longtime site participant is this thing called the January barometer. The old rule is as January goes, so goes the year. And it's interesting how it's sort of, very normal price action. My hunch is we have some sort of seasonal rally once we get through sort of this January, February sort of hiccup. Then sort of May, June, July, usually the market tops out. It looks like the market's anticipating a pretty flat correction through May, June, July. Once we get into the sort of the second week of July, then we're into second and third, second quarter earnings. And the market usually catches a bid into the end of the summer. My hunch is, this was around the options expiry. I talked lots about how the market was incredibly manipulated through that event, which is so ironic, right? Because everybody shits on crypto about how manipulated it is. And yet the irony of it all is that, the whole world just witnessed a massive market manipulation. And nobody in the media said boo. Why? Because they were told to keep the fuck quiet. Don't say anything. Which really pisses me off because I just kept going day after day after day. Look at this derivatives information. It is blatantly obvious what's going on. This market is being completely finessed. So anyway, point of the matter here is market came off after that event. We're kind of chopping back and forth, and I don't know how the month's going to end. But if this is sort of typical January barometer, my hunch is actually the market stays relatively positive through the end of the month. And then like last year, literally as soon as the month was over, the market fell apart. And remember, January, beginning of the year, we should expect some pretty nasty chop here, beginning of February, probably maybe even into the Ides of March. So I hope that helps you sort of see. We'll have to see how this goes through the end of the month, but good that you're sort of watching that. That's good. Okay, so no specific requests here. Over on YouTube, did anybody ask you for anything in particular there? Doesn't look like there's too many people over there. When's the can buy Lambo period? Hi, see, look at that. So we still got people thinking about Lambos when it comes to crypto. So fortunately, that means we're probably going to have to cool our jets for a little bit longer. Would like to see a nice little rally on Litecoin into its happening. If there was going to be some sort of fundamental driver that's going to push this market higher, I really would like to see it come out of that Litecoin story, because that would make logical sense, right? The market's rallying because of a fundamental event. Where did I have that? One of these pages. One of these pages is not like the other. Should be over here. Nope, not there. Over here? Oh, here. So if I was cheering for anybody to actually lead us out of this, I would love to see like Litecoin lead. I suppose there's still, the whole question about the Ethereum Constantinople network upgrade. So you can see longs are getting out of Ethereum here. They're really, the shorts haven't really ramped up too much. A little concerned with Litecoin that this W has now come in on shorts. And of course, we have this little W already working on Bitcoin and this M here. Yuck. So I don't see it right away. How's that damn Litecoin chart? Kind of around here somewhere. I thought it was right here, but nope, not there. Nope, not there. Where are you, Litecoin? Maybe I have it somewhere else. There's that update to that chart I talked about, right? Like, and like that was this morning. Look at these wicks and tails. I mean, this has just got FU written all over it, jerks. And really, probably, investors are best served just to, when they're making the market look like this, just slow down. Let this thing resolve, and then we can get back to work. All right, so here is that Litecoin chart. Kind of think we're stuck in this range right now, sort of a rising, expanding wedge here of just trend lines. So you can sort of see the playground the market's in. I actually kind of like the idea of a Litecoin long setup developing off of this bot level. You can see, but I have to see, we got, I think this was actually a new low. So again, think washing machine, right? I was thinking long through here, but I have to have one low, two lows, and then this third low, but then they went and made new lows on this candle. So the whole damn thing had to be reset. Again, more washing machine talk, which really sucks. Counter trend rally exhausted right at the new bot long entry. So I think our trading range for Litecoin appears to be in this range here. We'll see if this develops into an AB equals CD short, right? If we get one high, two highs, three highs, and then the setup come in. That's an awfully small range, so I doubt it. But, only time will tell. I actually do like the long side of this. And if our scenario of sort of the market setting up for that Litecoin halving event does play out, I'd love to see a nice bottom come in here and set up a base for this thing. So, there's that. Maybe we can make some money off of it. I remember in the last Litecoin halving, into that event, there was a guy in China who was running a Ponzi, and they bid up Litecoin dramatically through that event. So, maybe that's where you can buy your Lambo. And then, really, like I said earlier, what I really want to do is I want to find the W's. Show me coins that are putting in W's, especially against US dollar, right? I'm a little leery about looking at your name versus Bitcoin alone. And I've said that before. I like the idea of hunting W's if you can look at them and find them off of your US dollar denominated name. And what's interesting is if actually we do this versus Bitcoin, I think this even looks like a better chart. Yeah, look at that base, right? And that's where I bought. So, versus Bitcoin, this looks fantastic. But this thing might take off versus Bitcoin because Bitcoin craps the pants, right? I think it's a really good idea. Hey, man, here to make money from trading, right? I want to see my account balance go up. Is make darn sure to look at your ideas versus US dollar. Do they have bases working? Okay, I think I'm done for today. I've been talking for about an hour and a half or so. Why don't we leave it at that? I didn't see too many other questions. What's this one? Heard great things about you from one of your previous students. Oh, that's cool. Was wondering, with your point of view, if you could look into Holochain. Hot for me, wondering how high this might go. Holochain hot. Hotochain? No idea what that is. I'll type it in here, and if it comes up, then we're good to go. Holo? Got that right there? Hope so. Boom. Woo! Now that's what I call a bull. Woo! I mean, the cool part about it is hopefully everybody can see everything that I've just been squawking about what a half decent trade idea looks like. What's cool here, Ashkan, is you should be able to look at this and tell me, oh, I see exactly where I'm supposed to be long. Everybody should look at this and go, wow, that looks like a big W. Down, up, down, breakout. And actually, this is a really good example of what they call Wyckoff, in that the breakout, you notice that the market came back down to the original breakout level, and there was so much buying demand that every time the market came down into that level, it found buyers. So in essence, that almost becomes like a trend validation that this level is for real. And the interesting thing is, you can't actually come back and say, well, the market didn't give me an opportunity to get in. That's not true. Right? You had 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 10 days to take a position on that with it just sort of sitting there at that level. So, the irony of all this is everything that I teach in the course, everything that I teach in the school, everything I try and do through these daily briefs and these broiler chicken shows is actually in just one image here. Really good application of the concept of Willie being stupid. So, if you were long and you were like, oh, I think I'm going to sell. Willie here just saying, you know what, that's not a good time to be a seller. Okay, well, that's even better. Right on, dude. Technically speaking, like Dav recently came out with his Grim idea. And so here's a really good example where you just don't know where the floor is. I think there was a nice little trade that developed off of here, right? You can see down, new low, rallied up, came back down, no new lows. So really cool little W there. So this is sort of what Dav was sort of talking about. Just let the market come out. So this trade happened. Pooh, big rally. That was 66. So that means 12, 13. You get yourself like a free position right up in this area. Gee whiz, what a surprise, the thing stalled there. All right. Market works its way right back down to the original bottom, goes and puts in another W, and you could even argue that there's even a W off of here, right? Down, up, down, breakout. Regardless, hopefully you can see the W's down here. Up we go. Anybody who bought here, this is 5-6, so absolutely, you should be sitting on a free position somewhere in there. All right, why don't we do these as, I'll do this as yellow. This is actually a really good example of what I call like doing multiple cars. So let's say you take your original investment, you go and buy the W, you sell half on a double, you get your original money back in your hands, you let the market work its way down, put in a new W, put your now original investment, you still have this free position from this guy working, but you put your original investment money back to work, and now you have 2 free cars working. And you might just keep doing this 3, 4, 5, 6, 7, 8, 9, 10. If we can break out through the top here, and it looks like momentum's pretty strong here. I don't see any signs of failure yet. Willie's not stupidly overbought yet. So, if we do break out through the top, we can start doing things like extensions. You know what this reminds me of? This reminds me of Dash and Amanda's penthouse, right? So my next objective would be what we call the parking garage. Would be up this range extension 1.618 up to 200. And what'll probably happen is this guy will hit his double level there, and this guy will hit his double level there. So those guys are going to be selling some coins up top here. So I hope that helps illustrate. Right now, you should be sitting on a free position. There should be no risk whatsoever to you. And you should be getting ready to spoon feed the market more coins on more doubles up top. Now, I do know some people are like, well, keep selling half on a double, then I end up selling all my coins. If you're like, well, you know what, maybe I'll sell another half on a triple or quadruple, I don't really care. The most important thing, though, is getting yourself into that first risk-free trade. Once you get into that first risk-free trade, then you're laughing. You're playing with the market's money. What you do with the market's money from that point on, that's up to you. I'd also, this reminds me of ICO. Was it ICO? IOC. I actually think that this thing's got a really good chance of tagging this trend line at some point down the road. So my hunch is the top comes in somewhere up in this area up there. Now, of course, that's predicated on this level being broken. So, too late to be a buyer. If you wanted to buy this thing, I would say, okay, well, if we're lucky and we get it zipping back down against the bottom end of the range, you can start hunting your W's down in here. Geez, that's awfully big, eh? There, 61.8 to 78.6. And this really shouldn't surprise anybody, especially long-term or site members. What we often find is that this reload zone lines up really nicely with the original market bottoms. So in this particular case, you can see this would be like a resistance zone, but that's an extension if the market can break out. And this would be a support zone. And if you wanted to join the big kids, right, maybe work your bids, pull up sends, gap scripts, see if you can find any gaps that line up with these reload zone levels. But my hunch is if you wanted to join the party, I would be working a bid somewhere down in this area. Okay, I think I'll leave it at that for today. I hope you guys enjoyed the presentation. There was a couple key points that I really wanted to make about the demographics and the money flows and all that kind of fun stuff, which is real sort of level 1 heady stuff. They're working through a really tough week here. So I think on balance, I apologize that I had to take up about half of the episode to do that, but I think it was important that I did do that. We took a little bit look at the Twitter feed, and hopefully I've explained everything that I sent out there. This is Chop Vegas in Bitcoin right now. Be very careful. Go very slowly. Small bets. There's no real hurry. If anything, we're too late to be shorters, and the shorters are taking profits over the past little while, and a little too early for us to be too bullish. And if anything, what I'd love to see out of Bitcoin is a nice rage quit. Somebody get really angry, maybe a big bankruptcy, a big dump in price, and then I'll know that the bottom is finally in. For now, we're just sort of slowly grinding lower in this trend channel. And until this sort of situation changes, there's nothing really for a guy like me to do here. Just hurry up and wait. Okay, guys, I'm going to leave it at that for this week. Hopefully, we have big bullish W's that come in here next week's video, and we can start talking about hunting longs. But for the time being, like I said, I'm just cooling my jets and just waiting for those W's. All right, guys, have yourselves a great day. All the best, and bye for now.